I'm Kelly DePonte of Probitas Partners, and I'm here at SuperInvestor US in San Francisco with Scott Kupor of Andreessen Horowitz. Scott, I wanted to ask you, in a market which is going through lots of technological change, what are the trends that you are seeing which you think present exciting investment opportunities?
Yeah, there's really two interesting things. So we invest both in the enterprise and the consumer side, and what's remarkable at this time is there's massive change happening in both of those industries. So on the enterprise side, what we're seeing is with the adoption of mobile computing in the enterprise, with the adoption of SaaS-based applications, there's almost a wholesale turnover of all the kind of fundamental infrastructure components of enterprise. So that's a real ripe area for us to invest in. And then on the consumer side, with the rise of things like tablets and mobile phones, obviously the market opportunities for successful companies on the consumer side are just massively larger than they have been in the past. So that's really, again, another area where we're spending quite a lot of our time focused.
If there was one of those that you might think might be the next new thing, or do you expect to have a next new thing?
Well, I think definitely in the enterprise, I think the biggest areas that we're focused on are, if you look at storage and networking in particular, those are areas that have had very large incumbents in those companies with very kind of successful businesses, and there hasn't been a lot of turnover yet in terms of who the kind of new incumbents on there. We're doing a lot of investing in those core areas, and I think you're going to see over the next 5-10 years kind of new entrants in the both networking and storage space, which will really kind of give rise to some new changes in the enterprise.
As far as in Andreessen Horowitz itself, you're a relatively new force in factor in private equity, but you really have had exponential success in the fundraising market, which otherwise has been fairly tepid. How do you build, as a newer firm, the level of degree of trust with limited partners that has really led to that fundraising success?
Yeah, I think we've done a couple things. One is I think we've just been very clear about what our value proposition is and why we think we can be successful in this market. And what we've said to our limited partners is, look, we're going to have two fundamental differentiators in the firm. One is the makeup of our general partner base, which all comes from people who've been deep operating professionals. And two is we're taking a very different approach to how we add value to portfolio companies and really investing the vast majority of our actually resources in helping companies post-investment to realize hopefully the accelerated growth they can. And then I think the other thing we've done is we've been very transparent and communicative with our LPs. And so we've really been careful to explain to them what we're doing, to kind of help them understand how we view the business, how we're thinking about it. And I think that partnership has really helped us to be able to be successful, as you mentioned.
Great. Thanks very much.
Great. Thank you.
Bye.